Good afternoon, everybody. Christian here. Let's see, today's date is the 7th of April, and it's 8 a.m. Market will be open in about 30 minutes. Today, I'm just going to give you a little update what's going on. My portfolio here is I'm trying to build that dividend portfolio, and I've made some interesting moves that I think I would like to share with you. So, where are my tools? Looking. No, they're not. Yeah, that's right there. It's been a while. And let's see, I go back to work tonight. I do not get paid this week. I get paid the week later, so I won't be making any kind of investment this week, but I will next week. And I might change the day that I make these videos, because right now they go up every Wednesday, which is one day before I get paid. It'd probably be better if I did it like the day I got paid or the day after, so that you guys are kind of updated when it happens to whatever I'm buying or selling. Not that this is investment advice or anything like that. I'm not trying to do that. I'm just kind of sharing with you my journey, let you know what I'm doing and why I'm doing it, what my thought process is, so you could learn something from it. Right? It's just educational and entertainment. That's it. Anyway, so let's get after it. The first thing I want to do is kind of highlight to you some changes that we've seen here. So the portfolio has been updated a little bit, and what we have now is, last time I showed you guys this, we had an annual income of $172 and $14.33 per month is what our dividend income was, because we only had one position, which was the 50 shares of Altria, ticker symbol MO, and that's the only thing that we had in the portfolio at that time. And I had planned on purchasing more of the company, and I probably will in the future, maybe, but when the next time I got paid, the stock had continued to rally. Let me go over here. We'll come look at it later. Anyway, the stock had continued to rally, and it was no longer as advantageous to buy at that level comparative to what else I could have been buying. For example, I could have been buying Williams Company, ticker symbol WMB, and the yield was just slightly better. And so I went ahead and bought that one instead, and I ended up acquiring 55 shares. This raised the overall dividend, right? So our total here was $21.85 a month is our average, and our annual dividend payment is $262.20. You can see those numbers right here as well. So that's my main thing, is to grow that number. However, as I was doing this and buying other opportunities, which is good because it starts to diversify the portfolio more and everything, I just started thinking about it in a different way. And as you're building these positions out, then every single time you buy something, then your broker is like, hey, we'll give you margin to buy more, and you can use these shares as collateral and so forth and so on. And at first, I was like, no, I don't want to do that. Obviously, if you look down here, you can see that I eventually changed my mind, and I've now got $188 right here in the negative, so it's red, and it's basically credit that my broker is giving me, and I'm using my shares as collateral. And we'll talk about that a little more. But before I go on, it's important to know that whenever you introduce credit like this, you've increased risk dramatically from a cash system to a one that's leveraged. And like when you increase risk, if you don't know what you're doing, you can blow up your entire account. You can end up owing more money than you had to begin with. It's just a really dangerous thing to do. And the only reason why I would do it is because I believe that I'm capable of managing it and keeping some self-control and things like that. And so I started to use it. It's not for everybody. Not everybody has the skill set and the understanding to use it. One of the things that I ended up doing, and the reason why I use it, I will pay this off right here, this $188.59. I'll pay that off this next time I get paid. I'll just drop the money in my account and it'll disappear. And I won't be looking to stay leveraged like that. It's not my objective. It just happened in this particular situation. I wasn't paying attention, and I went to go make a trade based on some numbers that I had sketched out before the market opened, and I did the trade backwards and ended up with a negative amount here, and I was like, well, I'll just leave it there for the time being. It's not a big deal. In any event, the main thing that I was going after was this position here, the Kinder Morgan position. That's what I want to talk to you guys about, and I'll share with you kind of my logic here, my thought process. Right now it shows Kinder Morgan position, and it shows 100 shares. but I don't actually own it. And that's why there's no entry price right here, and there's no cost basis, and there's no data here on the dividend side. However, I have structured this trade in such a way that I'm highly likely to get these shares, okay? I basically sold a put, and I'll show you that in a minute. And that is probably going to end up having those shares put to me, and that's what I want. That was my objective. And when that happens, then I'll put in the dividend amount, and we'll see this grow and this grow and this grow and all that stuff. So, okay, so that was my basic idea, is what I wanted to do. Also, when I obtain this position, I will then have dividends paid out in those months that right now are blank. This particular company would have a payment on those months, and so it would fill in my graph as well there. So I just started to get that diversification going, starting to kind of flesh out the dividend cash flow as it's starting to fall into place, and we'll keep adding positions again and again as time goes on. Let me quickly show you what I did with the Kinder Morgan situation. I did it a little different than maybe you're used to seeing. So let me quickly go over there. All right, so this is the Kinder Morgan company, right? And this is the options chain. And you'll notice that I've gone way out in time, gone all the way out to 6 months, basically, and roughly. So the reason for that is that I wanted a lot of time, therefore giving me time to prepare my own financial situation. And I wanted to go deep in the money because I want the shares to be assigned to me. And so I sold an option at, they paid me $655 to turn around and buy it from them for $23 a share. The current stock price is $16.76. So you can see that I'm deep in the money here. Now, before you're freaking out if you don't know how this works, basically what's going to happen here at the, I basically just purchased, the stock at roughly what it's trading at, okay? Within the next 6 months, if the stock price does not get above $23 a share, I will be forced to purchase it, $23 a share, by expiration, and that would be okay with me because the current share price of roughly $17 plus the $6.55 that I was paid. If I go to the chart, you'll see this is going to be my average cost, $16.45, and that would be an acceptable price for me to pay. I don't have a problem paying that amount. So, even though I was paid a premium and everything, if the stock price were just to stay the same level, the way it would work out would be as though I purchased at $16.45. If the stock price were to rally up here and close above this level of 23, then I'm not going to get the shares assigned to me. They will keep their shares. The only thing I'll be able to keep is the $655 that they paid me to make that contract. And that contract, like I said, was good for about 6 months. After that, I will go out and acquire another one. So it may not be on this company, it may not be on some other company. But that's my basic idea. Is what I'm trying to do is use the margin or the extra buying power that I have in my account above and beyond the cash value to acquire or lock in decent prices that I like in other companies and just continue to diversify and build my portfolio out one more position at a time, just one and then another, and so forth and so on. You also get the benefit of getting the premium in some cases, and so that's something else that I'm adding to my portfolio over time, is the premium payments. So that's kind of a rough idea of what's going on, why I'm doing what I'm doing. Obviously, it's a dividend payer, so that would be, again, something that would fit my portfolio. It's an S&P 500 company, again, something that would fit my portfolio. As I was doing this and just kind of in my mind thinking it through, walking myself through my process, and as the portfolio gets bigger, my buying power gets bigger, and I can acquire bigger positions and so forth and so on. As long as I can manage them with the cash that I have coming in every month into my portfolio, as well as my buying power and everything, and then kind of giving myself a cushion at the same time. You don't want to use up all your buying power, because if the market were to sell off dramatically and pull your stocks down, the value drops, and then you have a hard time. So it's one of those things that you kind of got to balance right. And I think I can do that. So I'm looking at this saying, okay, just keep adding these positions and just find another one and then reach out and grab that one and then reach out and grab that one. And it started to remind me of that dream I had some time back where I saw this grass, this field, and it was all green, and I took a step and it turned to gold underneath my foot. And I took another, and then when another scene, I see myself in a different position and I'm touching more of the grass and it's turning to gold. And then I see myself again in another position and I'm touching even more grass and it's turning into more gold. You know, this behavior that I'm doing right here, this logical thought process and building this portfolio out, reminds me of that dream, and I wonder if this is not that dream. It sure seems like it. So anyway, just a quick little update. I'm gonna let you guys know what I'm doing and why I'm doing it, and I'll keep building and hopefully still going to reach that 100,000 goal that I've set for myself. And right now I'm 3.6% of the way there. So I got a long way to go, and I'm having fun. I'm working my way there. Okay. God bless. Take care, and I will see you in the next one.